I'm going to provide a strategy builder for each of the strategies which we are going to discuss. In this lecture, I want to explain how you can use the strategy builder and what kind of metrics it will give you automatically that I want to show. There are three sheets are there in this file. You can see base data sheet, which is nothing but the data like what are the strike prices against which the option premiums and delta values. And then I took one example to show you exactly how it will work. And finally, I have taken the strategy builder sheet where by entering some of the values we can get automatically other metrics. So now first of all let's see what is the data we are taking in this scenario. I am taking SPY, which is nothing but S&P 500 ETF. So generally S&P 500 value whatever it is there, 1/10 of that will be S&P 500 ETF. Generally, people who want to trade with less amount of money, they go for SPY. S&P 500 index is SPX. So SPY is one of the most commonly used options in US market. So now if you see, when I took this data, it was trading at 435. I have collected the option premiums and delta etc. for August month expiry. So I have taken from somewhere around 430 to 440 because these are the strike prices I want to take in order to form a butterfly strategy. All the option premiums are mentioned for corresponding strike prices. Also, I have mentioned the delta values. What is the delta will tell you? For example, if I say 430 delta is 61, somewhere some people write it as 0.61, 61%, or you can simply say 61, which will tell you that there is 61% chances that this 430 call will be in the money. That means what? By the time of expiry, 61% of the chances are there for the index to go above 430 or close above 430. So delta is used by people in order to understand the probability of success. I will show you in this scenario what kind of probability of success will be there for the position which we are going to take. That I will explain when I show you the long butterfly example. Let's get into the example here. I have taken 430, 435, 440. As you can see clearly here, I am buying 430. I am selling two lots of 435 and I am buying one lot of 440. So effectively what I am getting a premium of 0.65 by buying 430, 440 and selling two call. We are in a debit of 0.65. SPY has a quantity of 100. Effectively, if somebody has taken this position, 100 into 0.65, so their initial debit is $65. In case by the end of the expiry, if SPY is closing around 430 to 440, because beyond 430 or above 440, your loss will be anyway same as what you can see in this scenario for 430 and 440. The loss will be stagnated after a certain point of time because whatever may be the initial debit that will become your loss. So I just found out what kind of values are there in case if this is the closure. Accordingly, you can see the profits are there. As you can see clearly, the highest amount of profit coming in the middle, that is the strike price at which you are selling your position. So we are selling two positions at 435 strike price. Coincidentally, the profit is also 435. That is the maximum profit. You can see the loss, maximum loss is 65. That will be constant even if it goes below 430 or above 440. Right? That you can see here. Maximum risk is 65. Maximum reward is 435. And the break-even points will tell you where there is no profit, no loss. Suppose if it closing between 430.65 to 439.65, your position will be in profit. If it goes beyond that, either on the upside or downside, then your position will be in loss making position. So now let us see what kind of probability of success is there for this particular scenario. For that purpose, let's understand based on the break-even points here. You can remember here simply 431 and 439. I want to see the delta, then I will explain you. Let's go back to the base sheet. If you see 431, the delta is 59. That means there are 59% chances that it will go above 431. Similarly, there are 42% chances that it will go above 439. closure will be above 439, there are 42% chance. But for us, it need to be between 431 to 439. I don't want it to go beyond this so that I cannot make loss. If it goes beyond 439, my position will be in loss. So out of the 59%, this 42% is not favorable for us because that is a loss making scenario. The only scenario what we want is in between. So 431 to 439, what is the probability of success is 59 minus 42. That means the probability of success is only 17%. So this now you can see the strategy builder sheet. Actually, how to use this sheet? Whatever the position you are taking, you need to enter that here, like 430, 435, 440 is what I have taken in this scenario. You can change your strike prices, which is the position you are taking. Accordingly, you enter the premiums here. What kind of lot size is there? Suppose if it is 100, I changed it to 50. Suppose if I change it to 25, automatically everything will be changed accordingly. So you see this is the expected closure by the expiry. What kind of closure is expected based on the position you are taking? You just write down so that automatically it will calculate the graph. It will show you what kind of profit and loss will be there. Similarly, you can find out the maximum reward, maximum risk, break-even points, profit and loss scenario. So all these key aspects you can find out. Delta you cannot find out directly because we have to check correspondingly what is the delta, and accordingly you can get the value. So simply if you want to understand the probability of success, what is the way to do? You take the delta at the upside break even for a long call butterfly. What is the delta here? And what is the delta at the lower or the downside break even point? The difference between these two will give you what is the probability of success. So this is the way you can use this long butterfly strategy builder. Whenever you want to take the position, whenever you want to analyze the position, you can just simply enter here and you can see automatically you will understand very clearly what kind of risk and reward is there in the particular scenario.